Hey everybody, this is Kim Swartz and John with Captain John Charts, and we are doing February chart art part 1. It's Thursday, March 3rd, and it might as well be January here in Detroit. We are recovering from ice and snow in March. The kids were at home yesterday driving the parents that stayed behind crazy, and the S&P managed to go above its neckline. We have actually recovered, haven't we, John, from the Boston Dynamics robot video?
Really?
That was very frightening. I encourage everyone to head over to YouTube and check that robot out. Okay, so right now we are PC free and unscripted, and we're going to give you some chart reviews, 14 names, 14 charts minimum. I guarantee there's going to be more. All right, so let's just get right on to the first one.
Well, so what we did is we looked at what we feel to be actionable long and short ideas in the S&P 500, and one of the ones we really liked an awful lot was Fox, 20th Century Fox. Reason being, we had a nice weekly bullish divergence with momentum. We had also a pullback, a second test in as many months of a support line with two bullish candles, Japanese candlestick patterns, and it's worked out very well for us. It bounced right off, and so far we're very pleased. From the time we posted it, it's up over 13%, and so it's worked out very well for us.
Excellent. Ooh, international flavors and fragrance, ladies. You know this one.
Well, they may not like it now. This is an interesting short idea for us because we noticed that on a very longer term chart, it reached a Fibonacci extension target, which also happened to be a double top, or what appears to be a double top, and it also broke down out of a long-term trend line, which dates back to 2009. So we like this one to avoid, or to if you like to play the short side, to play a short here. It's working out so far, even though the market's rallied. It still is on the positive side from when this was posted.
Ladies like to short.
You do?
Oh yeah, we'll sell it all day long.
Yeah.
All right. Okay, here we go.
So you buy the fragrances and you short the stock.
There you go.
Okay. Next one. This has been one of our favorites for a while, until actually last year, until it broke down. But now it seems to have found some Fibonacci support, as well as finding some trendline support. And we were watching for the relative strength to break out versus the S&P, which it has, and this is another one that has done really quite well for us.
That was February 12th.
Yeah, yes, almost up 10%, just under 10%.
Fantastic. Oh, Advanced Auto Parts.
Parts are parts.
February 11th.
Another interesting chart because it obviously pulled one of the leaders actually last year. The auto parts stocks did great last year. Another leader that got hit pretty hard, hammered, if you will, and then after getting hammered, it made another hammer on a weekly chart at some Fibonacci support, 38.2% Fibonacci support, as well as trendline support that dates back for years. So we like that, and we got excited. We're looking to play looking to play counter trend moves. Here's the daily chart, and what's nice about the daily chart is that you can see that the relative strength really has been picking up of late, even though the stock has been falling. So we've liked that since we put this report out, and that's actually up a little bit over 10%.
Excellent. Oh, Boston Scientific.
Well, body parts.
Yes.
We all need those. I need several myself.
Well, it managed to hold above the weekly price support.
Yeah.
And that was as of February 12th when we posted that, and that was the last Friday before that. So
And you'll also notice on the lower chart that it is holding up well versus the S&P. It consolidated for a while. It broke out versus the S&P. It came back and tested. So we like the relative strength here. And you'll also notice in the price chart that every time it seems to go into this consolidation phase, at least over the past few years, when it breaks out, it's usually due for a big move. It hasn't done great, but it is up over 4%. So nothing.
Here's the daily.
Yes, and there's a daily. And you can see there was somewhat of a divergence with the RSI momentum indicator. The momentum indicator was flat, while you see price making new lows, and it got back above that trend line, and has managed to climb a little bit, at least for us.
Where's that one at, John?
Which one?
BSX.
It's up a little over 4.5%.
Okay.
I mean, we'll take it.
COG.
The COG. Cabot oil.
Yeah. Monthly chart.
Okay, so here's a very long-term chart, a monthly chart, and I believe that goes back to what year? Can you see
That's
that?
1998 that it has gone to that support and bounced.
Okay, so
Look at 1, 2, 3, fourth time.
Yep. Now some may say, well, it could be making a right shoulder of a head and shoulder top,
right?
But that hasn't been proven. But it's so far bounced. It has broken out of what we see on a daily chart of looks like some kind of bullish wedge, and it's broken trend line
And
resistance.
yeah.
So that's actually done phenomenally well. It's up over 12%.
Yeah, look at the momentum on that. That has Momo. That's an excellent one. Congratulations.
Oh, thank you.
Oh, DHI.
What do you call that? Dr. Horton?
Yes, the doctor.
The doctor. Hey, well, this is one of the best performing in terms of relative strength of the home building stocks is DHI Horton, and again, we're looking in this market to try to play counter trend moves, but it does have great relative strength, and you'll notice that in the past anyway, every time it's gotten oversold on a momentum standpoint and pulled back to support, at least in the last 3 occasions, it's bounced, and that's actually been quite a great performer since we posted this, up over 14%.
Okay. Mosaic.
You want to move to the next one? Oh, the Moss.
Yes, no Moss.
Okay, so looking at this.
No relative strength.
Well, no, there's not. Well, it's not. It's been a terrible relative strength stock, just like most of the commodity-related stocks. But again, another one that we just noticed had come down to a low, a major low from the past. It got deeply oversold in momentum. We see that the RSI diverged as price went lower. The RSI went higher. You can see that by the green arrow. And this one has been really the one that has taken the cake in terms of performance. And that has bounced up over 24% since we've posted this.
Well, congratulations, John. Those are excellent numbers. We have a lot to be grateful for, don't we?
We sure do.
Okay, well, this is going to end part 1 because we have a few more charts to get onto to show you. And we will be right back to you with today's menu, the February charts.
And don't forget
what?
to sign up.
Oh, that's right.
At Captain John Charts.
Don't forget to get the Hammer subscription. We have the right tool for every job. All right, we'll see you in a minute.